In this video, we will take a look at the recent earnings report of PayPal and explore the potential for upside in its stock. Before we start today's topic, please note that the information presented here is for educational purposes only and not financial advice. It's recommended to conduct thorough research before making any investment decisions. PayPal's compelling buying opportunity when it was priced around $61 per share, and the recent events have led the stock had faced a sell-off, presenting a very attractive entry point. However, recent developments have led to a decline in the stock price, currently sitting around $65 per share. The market's behavior has been puzzling, as it sometimes rewards companies when they present poor fundamentals while punishing others like PayPal, which boasts sound fundamentals and fair valuation. This is why we need to look more closely at what's going on. One concerning aspect highlighted by the market is the decline in active accounts. While some argue that PayPal's payment services don't solely rely on active accounts, this trend is still not favorable. The decline began in late 2022 and has persisted for 2 consecutive quarters ever since. Another factor that caused alarm is the decrease in the operating margin. It peaked at 23% in late 2022, but by mid-2023, it fell to 21%. The CEO attributed this to increased losses in PayPal's business loan portfolio. The market's reaction might have been excessive. These developments have led to a sharp sell-off in PayPal's stock. However, it's essential to consider the context. The stock is currently trading at record lows, around $65 per share, compared to its peak at $300. Given this, the market may have overreacted. One factor to the decline in EPS was the operating margin loss that we previously talked about. In this aspect, PayPal did encounter a challenge due to increased losses in its business loan portfolio. Although this is expected to be a temporary setback, the market's response was swift, loud, and clear. With that being said, PayPal's capital allocation strategy stands out positively. Unlike many companies that buy back stock at highs and issue shares at lows, PayPal has shown a smart approach. In 2023, a significant portion of its free cash flow has been used for share repurchases at these lower price levels, a prudent move to maximize value for shareholders. Turning to the financials, PayPal maintains a healthy balance sheet with over $10 billion in cash and short-term investments. This comfortably covers its long-term debt, which stands around $10 billion. The current assets also surpass liabilities, indicating a strong financial position. To examine PayPal's investment potential, a valuation model was employed. Assuming a growth rate of around 9% from 2023 to 2027, a net income margin of 19%, and a P/E ratio of 18 times earnings, 2 scenarios were examined. If PayPal continues its share repurchases and trades at 18 times earnings, it could provide an upside of 15.6% compounded annually over 5 years, potentially doubling investors' money. Alternatively, considering a more cautious scenario with a P/E ratio of 15 times earnings, which the stock is currently trading at, the potential upside is 11.7% over the same period. Considering the current market environment, PayPal's stock price, and its potential for growth, purchasing shares around $58 to $60 could be a strategic move. This allows for a margin of safety and positions investors to benefit from any potential stock appreciation. With that being said, I believe that PayPal's recent earnings report has stirred the market, prompting a sell-off that was partially an overreaction. Some concerns are genuine, but it's still surprising to see that the market has decided to push the stock to its historical low. The stock is currently trading at historic lows, presenting a potentially favorable entry point for investors. PayPal's sound fundamentals, capital allocation strategy, and growth potential make it an interesting candidate for those looking to invest in the fintech sector. Of course, we should always remember that the company's own fundamentals may not always justify the market's movement, as there could be external aspects influencing the shareholders' collective behavior. I believe that now is a decent entry point to start buying PayPal over the next year or so, as PayPal is an established company and has enough strength to bounce back from this setback. Thank you for watching. Please like, comment and subscribe if you like my videos.